So 56,000 contracts were canceled in the month of August. That is the most recent data from Redfin with how many actual contracts. So these were contracts on homes to be purchased that were canceled in a single month. This actually is a record for the month of August since they started tracking the data. So we're going to jump into that. I'm going to share with you what are the main reasons why people are canceling. And then we're going to look at an interactive map to show you where active listing count, where the number of homes for sale is growing the most across this country. And you can let me know where you're from and if you're noticing an uptick in the number of properties that are currently listed in your area. All right, let's get into it. First thing I want to show, I'm going to share the screen, by the way. I like for you to be able to see the things that I am seeing. So I'm going to go ahead and do this. All right, you should be able to see. This is from Redfin. All right. And roughly 1 in 7 U.S. home purchases get canceled. So this is showing pending U.S. home sales that fell out of contract during the month of August as a percentage of all pending home sales. And you can see on this chart, 15.1%. That is the highest August on record since they started tracking back in 2017, 15.1%. That fell through in the month of August. Now, I want to share with you, too, the highest cancellation rate, the cities that had the highest cancellation rate. And let me know if you're in one of these cities. Atlanta, Georgia, 21% cancellation rate. Jacksonville, Florida, 20.5%. Orlando, Florida, 20.2%. Tampa, Florida, and Las Vegas, Nevada, both at 19.4% cancellation rate. So a little bit slightly higher than the national average, of course. But let me know if you're in one of those areas, if you're seeing the same type of trend there as well. So I want to look at why. Okay, let's jump down here to why they are. You can see this on your screen as well. We just scroll up just a bit. Here we go. Why are home buyers backing out of deals? Well, the biggest thing is due to inspection issues. You can see right here, if you're watching the video, 70.4% of the people that backed out of deals was due to home inspection or repair issues. Now, that's a big thing because if you think about it, if people are buying using some of these lower down payment loans, FHA, for example, it's 3.5% down. People are buying, not a lot of people have a ton of money to put into the property once they actually cover a down payment or closing costs. So they are definitely asking for things to be repaired. I totally get it. So that is the number one reason. 70.4% of buyers, according to these agents, home inspection and repair issues. So I totally get it. Secondary thing is buyer financing fell through. So the buyer went to get a loan. Maybe the interest rates have changed in the meantime, caused them to not be qualified for that mortgage any longer, or something came up that caused them to lose their financing. Maybe they got impacted by the economy. Maybe they lost a job. Who knows the exact reasons, but that's the secondary thing. 27.8% buyers financing fell through. Another reason is buyers were unable to sell their current home. So think about this. A lot of people do need to sell their current residence, their current primary residence, get the equity out of it, use that to then go buy another property. Well, if you can't sell your current home, then a lot of people won't be able to buy that next home. And then we've got change in buyer's financial situation. Buyer found another property. You can see these all on here. Now, buyer found another property. That could be because we are seeing an increase in the number of active listings also going forward. So that would cause somebody to maybe get under contract, but during the inspection period or before the inspection period, even a different property comes up that they like even more. So they've canceled the contract, hopefully within their due diligence period, obviously, or right at the very beginning because they found another property right away. So those are some of the reasons why. So let's go ahead and jump into, I want to show you the difference between the number of sellers in the marketplace and the number of buyers in the marketplace. And again, this is another chart you should be seeing on your screen there. This is also from Redfin. This shows you the blue line are the number of sellers currently in the marketplace, according to their data. And the red line is the number of buyers in the marketplace. And you can see the number of buyers has consistently gone a little bit lower. It stair-stepped down lower and lower over the past few years. You can see that. And then the sellers, blue line way up here, we've seen a lot more sellers listing their properties, getting them on the market. We're seeing it dip down just a little bit there, but still a wide gap between the two, sellers and buyers. It's over 500,000 more sellers in the market right now than the number of buyers looking to buy, according to the data. And here it is right now. This chart shows you there are a record 36% more home sellers than buyers in the current marketplace. And this shows you all the way back to April of 2013. Of course, this was during the pandemic right here. You can see that peak right there in the pandemic and then drop way off. And then here's where we are now. The latest data shows 36.3% more sellers than buyers in the current market. Let me know what you're seeing in your marketplace. Are you seeing a lot more active listings popping up? And that's what I want to look at next, is the actual number of active listings. I'm going to show that to you right now, this chart. Before we get into that too, I just wanted to give you some pointers. If you're thinking about selling a house, some of the things that you can do is to do a pre-inspection. So you get the house inspected prior to listing it so that you know what things might pop up or what things you can possibly repair ahead of time. And be open to backup offers, obviously, because you never know if the first offer is going to fall through or not. And then buyers, know your numbers. I don't mean just get approved by a lender, whatever they're willing to approve you at. I mean, know your real numbers. Know what you can truly afford based on your monthly budget. Know your numbers. Also, make sure that you have some money on the side. They say between 1% to 2% of the value of the house put aside for regular upkeep and maintenance going forward. So make sure that you have a side fund for that. Also, buyers can anticipate issues like higher insurance costs than you were expecting when you go to get your homeowner's insurance. There's a couple of tips. Okay, so the chart that you're looking at right now, this is showing the active housing inventory for sale compared to the pre-pandemic levels. So it's comparing 2019 to 2025. And you can see on here, I'm going to show you a more interactive one here in a second, but you can see this one here. Anything that's in the green shade is the positive. Okay, so meaning there's more active listings today in 2025 than there were in 2019. You can see that a lot of the country, the Northwest, parts of California, the Southwest, Colorado, also Texas, Florida, so the Southeast, a lot of the map has green on it. So it's showing a higher number of active listings than 2019. The parts of the country that still have lower inventory are going to be the northern part of the Midwest and the Northeast. So let's jump into, I want to actually do an interactive chart with you, or a map with you. Here we go. All right, so I'm going to zoom in a little bit on this. Let's go ahead and zoom in on here. So what we're seeing, like this is Denver, for example. Denver is 45% higher. But look at this. Colorado Springs, 90% more listings in 2025 than there were pre-pandemic in 2019. And then Pueblo, look at that, 160%. A lot more houses listed now for sale in that area. And then Phoenix, Arizona, up 33% more listings than they had pre-pandemic. And then here is Austin, Texas, up 55.9%. Eileen and Temple, 93%. And then, of course, you've got Dallas, 23%. And then the areas around Dallas, you can see, are quite high, 70s and 80%. And then, of course, down here in Florida, Punta Gorda, Florida, 83%. Lakeland, Winter Haven is at 58%. So parts of Florida, you can see, have definitely increased in the active number. Ocala, 88%. All right. So you can definitely see a difference. And then let's see where Memphis right here, 55%. Nashville, 38%. So this is how many, these are the number of active listings. If you, let's see, I want to look at one more. This is interesting. So Chicago area, look at this though. They're 58% below pre-pandemic levels, which is surprising to me. 58% lower than 2019. You've got Cleveland, Ohio, 45% lower than pre-pandemic levels. New York, 45%. Some of these others, 67% in Connecticut. Just a bifurcation of the number of houses listed for sale in the big portion of the country versus the Northeast and the northern part of the Midwest. So this is where, let me know in the comments section if you have gone through this situation of maybe canceling out a deal, or if you've listed a property that has been canceled. And then also let me know if you're seeing inventory piling up in your area. There's another chart I want to show you right now. I'm going to go ahead and share that with you. Here we go. This one makes it a little bit easier to see on the map, the active housing inventory, because this is showing county level. So you can see all the green means we have more active listings than we did in 2019. All the brown shade would show us that we have fewer properties currently listed for sale. So there we have it. Hey, I appreciate you all's time watching the video. Let me know in the comments what you're seeing in your area. I truly appreciate it. If you have any questions for me about real estate or the market, the way it's moving, what we're seeing, let me know down in the comments as well. And I hope that you all are doing fantastic. And thanks so much again for watching. If you like the video, let me know, and subscribe if you would. I appreciate it. Thanks so much.